sooner you realize that crypto is this big elaborate game designed to take the money from the masses and put it into the hands of the few, then you and I are going to be able to join these few in making killer gains. Recently, the markets have been tanking, and many people out there believe it's because of some news articles that are causing it, but actually it's not. This chart represents exactly what is going on, and if you can fully understand what's going on in this chart, then guys, it's going to be very easy to identify future pumps and dumps in the Bitcoin and crypto markets. I'm going to explain it to you in the next 10 minutes, so hit the like button and let's get into today's video. Now guys, before we look at this image and understand what it's all about, I want to look at what the masses think is behind this dip, because the masses take their information from the news. Of course, the news is there to tell us what's going on in crypto, but it's there to tell the masses what's going on in crypto. Remember, this is a game that the masses aren't designed to win. The masses must lose for the key players to win. And we want to be those key players, don't we? So what's going on? Why is crypto down? Well, over $40 billion has been liquidated in Bitcoin recently. And remember that term because we'll come back to that later on. And there's been some massive sell-offs from the Grayscale Bitcoin Trust shortly after the ETF approval. And that's because Alameda Research, the sister firm of FTX, which if you can remember to just over a year ago, was behind a huge scandal that caused an enormous sell-off in Bitcoin and ultimately caused the bottom of the Bitcoin bear market. Now, FTX has been selling off 22 million GBTC shares, which has created a large bearish pressure on the markets. Also, there's lots of stuff in the news about the 1.5% high fee on Grayscale, and in my opinion, it all feels a little bit too manufactured. News often does feel a bit manufactured because while there are things that happen in these markets, it's very interesting to realize that positive news typically happens in bull markets and shitty bad news always happens in bear markets. Weird, right? Well, actually, it's not. This is a heat map from a couple of days ago for Binance Bitcoin USDT, and it's a liquidation heat map. Now, what does this mean? Now, typically, you might think on a day-to-day basis, the amount of value in Bitcoin or whatever crypto comes mostly from you and I and other people out there buying it and selling it. You would be partly right. Lots of it is to do with supply and demand. And when people are buying lots of crypto, it's ultimately going to be pushing up the price because obviously the demand is increased and typically the supply also gets depleted. But there's something out there called a derivatives market. Derivatives means that there's different ways in which people can trade a Bitcoin and USDT or whatever assets there are, such as Ethereum. And derivatives, for example, might be futures contracts that can be done on leverage. Well, it means this. If I've got $100 to my name and I want to buy Solana. Let's say right now that Solana's worth around $100. It's not, it's worth a little less than that. But let's say it's $100. With my $100, I can buy one Solana. This means that if Solana goes up 10%, I make $10. But if I was to use leverage, then I can borrow money from an exchange in order to back my position. Meaning that in this situation, let's say I've got now 10x, which means with my $100, I've now got $1,000 of buying power. This means I can buy 10 Solana for my $100, and if Solana goes up, then I make lots of money. But if Solana goes down 10%, then I lose everything. That position gets liquidated so that I lose my money and the exchange doesn't lose any of its own money. And hopefully that makes sense. That means that there's lots of money borrowed from exchanges in order to make lots of different trades. So while lots of people might not be interested in buying crypto right now, a few people armed with the powers of leverage will start to enter into the market. And the more the price goes up, the more people will start to get on board and follow that price up. And there's certain areas where you will start to see a lot of trades going in. And typically these trades will have underneath them what's called a stop loss. Now let's say in this particular image, you've got Bitcoins at around $40,500. Lots of people at that point will think, well, yeah, Bitcoin's going to go up from there because I've caught the dip. I'm going to go long with leverage. I will put what's called a stop loss underneath that trade. And what that stop loss basically does is it triggers a sell automatically so that my loss is limited. However, when loads of people stack and put their stop losses in the same place, you create a big zone of liquidity because those stop losses effectively turn a buy into a sell. And what big money needs to do is to shake people out of positions to fill their bags. So what they'll do is they will drive the price into an area like this where you can see the yellow showing that there is a ton of stop losses sat there to suddenly flip the market into taking loads and loads of sells so that they can then fill their big buy positions without rallying the price too quickly. And ultimately that's why the price will suddenly spike down, fill the order and come back up. Big institutions play this game time and time again because they just look at maps like this and they do what? They go and seek that liquidity and take it out the market. Now that was a very important one because that was a couple of days ago, and now we find ourselves here. You can see that that big yellow piece of liquidity has gone, and at that time a lot of sales came in, and guess who was filling those orders to stabilize that price? Well, all those little sheep out there were starting to shit their pants because Bitcoin was going to go to 12k. Big institutions had stacked their buy orders just behind all those liquidations. So what happens? Everyone gets liquidated, the banks fill their bags. Now what happens, do we think? Well, after that big shakeouts happened, you could anticipate that maybe our next zones to be filled are, guess where? Back up here. So what does that mean? In my opinion, and of course this is not guaranteed, we can go lower, there's now something like $3 billion worth of liquidations sat up around here. But these are not long liquidations. These are short liquidations. So everyone up here is borrowing USDT to bet against Bitcoin, have gone really heavily over leveraged into sells. Therefore, if we suddenly wake up tomorrow and you see a big spike towards the upside, that big spike will run into this zone. It will flip all of those Bitcoin shorts from big sell positions, over leveraged sell positions, into massive big buy positions. If suddenly we see the Bitcoin price spiking towards that, then prepare yourselves, because if Bitcoin gets through that, then I think we're going to see an astronomical surge towards the upside. Simply always saying from a day-to-day basis, and forget all about the news because it's complete BS, is a game of swings and roundabouts, finding these yellow areas on the chart. How do I find this? Well, guys, you simply need to go across to coinglass.com and it's absolutely free. Now, I did say absolutely free. It's not absolutely free, okay? What I'm using is the free version. I've not logged in, okay? You can see that there is a lot of data that you can still find for free. Look for these exchange liquidation maps. They might be really confusing, guys, but ultimately, all the big money is to create volume, trading volume in the markets, because that's when they make money. If the market's going higher and higher and people aren't starting to buy anymore, then guess what? We need to find liquidity. So once the volume dips and we're already high, then expect to see a dip lower. Once that dip goes lower, it fills all the orders, the volume picks back up again, people start to buy in, people start to get excited, money's being made in the markets again. Guess what? We're probably going to start to go higher. Go and look at the exchange fees, exchange earnings from the likes of Binance and Bybit and MEXC and whoever else on a day when the markets are pretty flat, and you will see that their trading volume is so low. They want to encourage people in and out of the markets by playing these games because it makes them more money. This is simply a money-making game, and yes, it's messed up. And yes, it means that inexperienced people will lose money. It's a dog-eat-dog world, so sharpen up. Look at these large trades coming in, real-time trades right now. You can start to pay attention to these kind of like Bitcoin pair trades coming in all the time, OKX, Binance, etc. Lots of money starting to enter into the space. And what we're looking for is ratios as well to start building up. The more these short ratios start to get built up, I will start to feel more bullish on Bitcoin. When everybody's going long, be very cautious, okay? Because that's when we start to see good amounts of liquidations building up lower down. You'll see a spike back down in those directions, okay? So ultimately, we want to do the opposite. We're liking to see that Bitcoin longs on Binance right now are starting to go higher on the short side of things. We like to see that the percentage shorts going in for Bitcoin right now are higher. The more we see this, the higher the chance of a quick spike down and then a push back up. But nothing is guaranteed in this world. I just thought I'd bring you something a little bit different. So what we're seeing right now, guys, looking into this Bitcoin chart, you know, I anticipate there may be a shove down to around sort of $27,000. Let me delete this current buy zone that we're sat in. If it happens at all, I do think that we will see a return maybe to around 36,800 up to around 37,900. Somewhere in this zone, I think we could see a big bounce. It's worth paying attention to that data on CoinGlass and starting to see whether or not we see more happening, okay? If we start to see a sudden run up towards this 42k zone, remember all those liquidations will suddenly trigger it to go higher, and we could see a very rapid move happening like this. However, if the powers that be, which is not the moves, but it's the big money manipulating the price, decide that they want to take it lower, then there's also a little bit of a liquidation zone sitting around 32 to 33k. For me, worst case scenario sits down here. Personally, what would I do? I might have some limit orders set for buys here, and maybe if I really want to have a real crack at getting lucky, maybe some lower buys down here at 32,500, because I don't anticipate it going much lower than this. But I've been wrong before, could be wrong again, so make sure you do your own research. Now, if you've been in crypto for a while, you've probably realized it's a bit of a pain in the ass during a crypto bull market to have all your money stuck in crypto, particularly if you need to access it quickly and turn it into fiat. this can be an issue. And that's why we partnered up with Meld, who've sponsored this video, who are now bringing a Web3 banking service. This means that you're going to be able to get your hands on a Meld card, which can be used to basically pay for everyday items in shops, using bank machines, etc., by transferring crypto in an app to any one of 16 different currencies, such as euros, USD, Singapore dollars, GBP, you name it. This means that I can keep my money in crypto and make the most of those pumps, but if I ever have any issues, I can pull that money out and turn it into fiat in just the click of a button. And if you want to apply for one of these Meld cards and to potentially qualify for winning $1 million in Meld tokens, then you need to use my link down below in the description. Now, what else is on offer at Meld right now is also very cool. Because of this, I've just set this wallet up and it took me literally 20 seconds. But eventually when I get hold of my Meld card and I'm keeping my crypto in one place that I want to have access to at any given time, I can also stake that crypto in order to earn additional rewards. So instead of just having my normal bank card, which is just sat there right now with fiat money in that's not doing anything, I can actually put money into crypto and store that crypto, stake that crypto and earn rewards on it. And if I need to pull out that money for whatever reason, I can do that anytime. All I would need to do would just be to receive funds here. Clicking on network, I can either send Ethereum, Avalanche, Meld or Cardano. And then once I've got those tokens, I can just go across to staking. Now this, as you can see, I've just set up here. I haven't started to stake any tokens yet, but what we can see on the right, which is really exciting, is these Meld pools where you can get up to 17.7% APR. Annual percentage return, which means that money that's just sitting in my account waiting for me to go and spend it in shops, etc., I can earn up to 17% on. Now we need to click on the Meld pools and we can see some of the different pools that are on offer here. Now some of these pools have different rewards. We can see the location of some of these pools ranging from Nuremberg in Germany, you got New York City, etc. And if we see there's different ranges in which I can lock them up for. If I lock up for 5 years, I get 17%, or I can do liquid staking and just make 4.4%, which might not sound incredible, but it's liquid staking, which means I can take out funds whenever I want and then just go and pay for different things using my Meld card, which is extremely exciting, guys. It's the future of Web3 banking, in my opinion, and definitely something you need to go and find out about. I'll leave a link for Meld down below, guys. You don't have to opt in and do the staking if you don't want to, but come across, set up a Meld wallet, and make sure you register for early access to the card and things like that. All found through that Meld link down below. Now, guys, hopefully you enjoyed that video today. If you did, do me a favor. It really helps me out if you can just hit that like button. It's like 10 seconds of your time and it makes so much difference to me. Leave a comment down below as well what you'd like to see in future videos. And if you're new to the channel and you haven't already and you want something a bit different, then subscribe and I'll see you in the next video. Bye-bye.